It's a jam-packed week for the business world on both sides of the border. In Ottawa, the Feds deliver their latest budget tomorrow afternoon. Wall Street and Bay Street are nervously watching temperamental stock swings, and round 7 of the NAFTA slugfest gets underway. But there's one thing investors really need to watch: the U.S. 10-year Treasury yield. All eyes are on the all-important 3% threshold. When 10-year yields break that mark, it historically signals a bear market is brewing. Well, they've been flirting with that level in recent weeks. And if a break higher does occur, bond market veterans warn the relative stock market calm could be shattered. There have been some recent head fakes. On Friday, 10-year yields were down more than 4 basis points. Today, they fell another 1% earlier in the session. Yields now sit at 2.85, but fears linger. The pullback comes amid mixed signals about interest rate hikes from the Federal Reserve. Investors will get the latest cues when new Fed Chair Jerome Powell testifies before Congress on Tuesday and Wednesday. Until then, they'll just have to wait nervously. Donald Trump also shook some nerves earlier today. The U.S. president talked trade during an address to the nation's governors at the White House. He singled out his usual targets, countries that he says take advantage of American negotiators. They include India, China, Mexico, and Canada.
We lose a lot with Canada. People don't know it. Canada is very smooth. They have you believe that it's wonderful, and it is for them. Not wonderful for us, it's wonderful for them. So we have to start showing that we know what we're doing.
Trump added that the World Trade Organization makes it hard for Washington to negotiate productive trade deals. He says members of its dispute resolution body tend to side against the U.S. To talk about the growing trade tensions between Canada and the U.S. during this latest round of NAFTA talks, I'm joined by Harvey Tepner, a private investor, former senior executive with W.L. Ross & Co. And in Washington, we have Edward Harrison, founder of Credit Write-Downs. It's nice to see you both. It's great to see you here in studio, Harvey. I'll start with you, as you're our guest in studio for the first time. Not the first time, second time.
Second time.
What do you make of what Trump was saying today, certainly in light of the setup of round 7 that is promising to be a pretty tense, pretty fractious round of negotiations?
Well, I still think the biggest trade issue the United States has is with China. I think Mexico and Canada are sideshows, although there are some real issues. The protectionism of the dairy industry and the poultry industry, the issue about whether Bombardier is being unfairly subsidized and the attempts to hurt their small plane, the softwood lumber dispute, which keeps on being an evergreen for forever. I think those are real issues, but sideshows. And I think the real issue should be focusing on China. I do think the president's right on dairy and poultry. I mean, who is the government of Canada protecting? They're not protecting the Canadian citizens, and it would be nice to have lower prices to help everybody, even if it helps U.S. producers. On Mexico, access to the markets is probably important. And on content of manufactured goods, especially in the auto parts industry, there are probably some real issues that should be revisited as to where stuff comes from.
Right. And I mean, we've long talked about the supply management of dairy in this country being something that we will probably end up trading off in these negotiations. Ed, from Washington, what's your take on just sort of where we stand heading into round 7?
Yeah, I think where we stand is that the Trump administration, you know, if they're really looking at America first, I think one of the big issues is the ISDS and the concept that you can have another state that's not the United States, Mexico or Canada, or these bilateral panels somehow control the outcome for organizations like the softwood lumber lobby. The softwood lumber lobby in the United States is saying that, you know, this is an abrogation of U.S. policies, U.S. sovereignty, and they want it to be stopped. So I think that's a big issue here that goes beyond just the U.S. and Canada and Mexico, NAFTA, but it goes to other countries as well. So this is sort of a test ground, a test case for the concept of America first. Are we going to allow a sort of supernatural body to dominate any sort of U.S. law, the America first doctrine that Trump is trying to put into play?
And, I mean, the dispute resolution system we have in place sure doesn't work very well right now, does it?
I don't think it works particularly well. I think Ed's right. You don't want to have a supernatural body. The 2 parties or 3 parties should get together and cut a deal. I think that makes the most sense, and not have a third-party tribunal impose outcomes.
One of the good things that came up over the weekend were U.S. company CEOs saying, listen, if NAFTA falls apart one way or the other, however this if it ends up being a bad deal, we'll move a lot of those jobs back to the U.S. Harvey, you first. Do you think that's a real credible threat?
I think it's a real credible threat. It's a long cycle. There's a whole big issue strategically about manufacturing coming back onshore, especially for critical areas. So I think that could be good for the United States. It could also be good to have it in Mexico or in Canada, which are natural allies and may offer competitive advantages in terms of manufacturing and cost of labor. I don't think it's a good short-term outcome. It's hard to take a big plant and move it willy-nilly in 60 or 90 days.
No, this is not a knee-jerk reaction. Ed, what's your take here? Is this largely posturing?
You know, I'm somewhat skeptical about the ability of manufacturers to move back to the United States and get jobs. A lot of times, you know, the differential, especially when you're talking about Mexico or other countries like China, as an example, the differentials in cost are so large that maybe what you're going to see is a move back to the United States with a huge amount of automation that's not going to be as labor intensive. So you're not going to make as many jobs as a result of that. And as Harvey was saying, you're looking at a longer-term time perspective. I don't see this having any sort of immediate impact in a beneficial way for jobs.
And Ed, we saw the very tense conversation, telephone call between President Trump and Mexican President Peña Nieto that really seemed to go badly, that seemed to set things off the rails a little bit. Is there a scenario in which you see individual negotiations? We talked a lot about this off the top of the renegotiation of NAFTA, that maybe Canada and the U.S. can sign a deal, and maybe Mexico and the United States can sign a deal. And everybody said, no, we want these to be tripartite talks. Do you see that possibility, that window opening again?
I definitely do, because, in fact, that's one of the things that I think we're going to see, because it's such a multifaceted conversation. When you have three parties, it makes it a lot more difficult. And so far, Mexico and Canada have played a kind of a joint team, like we're in it together. We want to see some sort of positive resolution. But at the end of the day, I think that we have very different outcomes in terms of you know, where the trigger points are for the U.S. and Canada versus the U.S. and Mexico. And there are people within the Trump administration who are very much in favor of the bilateral trade negotiations. Trump himself, he has said, yes, I want bilateral. Bilateral is better than a multi-state agreement. So I think that there is a real possibility for a bilateral outcome.
See, he says that, and it makes so much sense. And then I think of the fact that this agreement's been in place for almost 3 decades, where we've done nothing but integrate supply chains and management and company just distribution. It's incredible to try to undo that knot and end up with a couple of different bilats. Strikes me as a really hard way to solve a solution, to find a solution to a problem that could just be another tripartite deal.
Well, the simple answer to that is yes. It's very hard to untangle a web that's well integrated, and it's silly to try and do that. The question is the 2 or 3 or 4 areas that are problematic for the United States and Canada and Mexico, you should talk through, ideally on a 3-party deal. Maybe it's a 2-2-party deals.
Right. Do you think we end up with a NAFTA that's structured similarly to the one we have today?
I think you have a NAFTA similar with some real differences. I think the United States wants more access to Mexico. The United States wants more access to Canada, especially for the 2 areas that are protected. And the origin of content rules have to be stronger for that be domestic source products.
All right, we got to leave it there. Great to see you. Nice to see you in studio. Ed, thanks for taking us on board out of Washington. Ed Harrison, founder of Credit Write-Downs. Harvey Tepner, a private investor, former senior executive with WL Ross & Co.
Thank you.